Good evening, everyone. Thank you so much for coming to this session. Um, it's Ramadan going on, so I'm sure there are different amount of people who are here. Some of you must be fasting, some of you are not. But it's not easy for either one of you to come in the afternoon. Before I begin, those who have parked your cars downstairs at Building 4, if you have your tokens, we'll validate your parking. So you can go at the reception after the session is over. For 2 hours, we are able to validate it. So you can please do that. Please come. So today's session, we have kept this as a 3-day session. But in those 3 days, the kind of topics we'll be talking about will be separate day on day. So today we are going to talk mostly about how investments work, what kind of asset classes exist. We'll go a little bit into understanding how everything is priced. After the session is over, if you can just write down your email addresses, or you already have certain relationship managers who have brought you here, we will send you one practice account as well. And whatever we are going to teach you today, you can put it in your practice account and try to do it. If you wish to come tomorrow, so tomorrow we are going to talk more about technical analysis, charts, patterns, how prices move. And then on Thursday, when these sessions end, the last session is going to be about trading strategies, investment strategies, what kind of asset classes you can invest in, and different things. Now, we can do this in a much bigger facility with more people, but the idea of doing these sessions in small batches is to take questions from everyone. I'm sure all of you are here with a certain thing in your mindset. You wanted to understand or know about something. So let's understand first. If you have any questions of your own, something which you really want to know about, so I just want to make sure that I at least cover that part apart from what I have to discuss. Anything in your mind, sir? Like whatever you expect, whatever you want to know definitely from the session about investments or about any trade or anything related to financial markets. Or as the session progresses, I'm sure a few things will come into your mind and we can always pin it down, right? Yeah. But do remind me so I can put it down, so even if I'm covering everything, I do not miss out on what is here. We always invest, but the whole point of investing is we want our money to grow. What is wrong with the money which we keep in our pockets, which is there, or which we are keeping very safely in the bank? It's there, it is very good. We like that money, but the point is we want our money to grow further. So when we talk about growing our money or investing, what is the actual point? The point is we want our money to grow. Why? Because we want the money which is sitting idle, it should grow in value, because there is something called inflation, which is very real. Something very small. Shawarmas back in 70s used to be 2 dirhams. Now it is 5, 6, 10. You go to a nice restaurant, 25 also. What is happening? Inflation is kicking in. Everything is becoming expensive. If you see last year alone, I'm sure a lot of you must have seen a significant increase in your rents, right? If I were to ask, what is the percentage increase in the prices? Can anyone take a guess? How much inflation is there? How much the price rise happens on an average year on year here in UAE? 3 to 4%? Anyone else? 7 to 8%, right? Some of you can calculate your rent went up by 10%, so you can say 10% also. But the reality is, yeah, on an average, directly 10%. On an average, if you see rents, if you see otherwise also 3 to 4%, 5% price rise happens. Now the point is, if you put your money in the bank, obviously here, because of Sharia compliance, you do not receive much interest. But if you keep your money in the banks elsewhere else, and you receive an interest also, then there is a decent amount of currency risk which you follow. Like for example, I'm from India. If I keep my Indian rupees in my bank account, I may earn 6 to 7% on a fixed deposit. But then If my currency depreciates against dollar, that is the added cost. So after 1 year, if things go expensive around 5 to 6%, I may have received that in a form of an interest, but if my currency depreciates further, then I'm still in negative. So it's not really sufficient for my money to be idle in the bank or to be kept with me under the bed, safe. Because even if I feel my money is safe, it's not, because it is losing out on the value. So we want our money to make money, we want to achieve independence, we want to leave a legacy for our children. The bitter truth, even if we want to do something more charitable, we still need money, right? If we feel that there is a certain community we want to help, we still need money. So I'm sure you have your own purpose why your money should grow. But these are the few things why we want investments to happen, because investments lead to the growth of our money. Now, if we see, so let's say, if we see for 2025, where is the investor landscape going? There are a few things which we need to understand. So we also need to understand how 2024 was, so we can understand how 2025 we have to plan about. So just to give you a slight idea, how many of you trade every day, if I may ask? How many of you invest normally? Okay, 1, 2, 3. How many of you have iPhones? Those who have iPhones, how many of you have Apple shares also? No, okay. Yeah. Only Apple. Only Apple products and Apple's in your bag. See, one point is the products you consume, right? So whether it is, if you're using an Apple phone, if you have a Netflix account, you're driving a Toyota, BMW or Volkswagen, if you're wearing Adidas, Nike or Skechers, if you're eating McDonald's, having Starbucks coffee, all of these companies you can invest in also. But what do we choose? A lot of times subconsciously we choose to buy the stuff, leave the stock aside. If you buy iPhone 16 today, after 1 year Apple will come up with iPhone 17 with a new and better camera, because that's all they change, iPhone to iPhone. But if you buy the stock also while you buy the phone, after 1 year the value of the stock might go higher. It might even include the cost which you have used in buying the phone. That is where the investment part comes in. Now, what you see here, this is the performance of the US stock markets. We're going to go much deeper what are stocks and how they work. But if you had done nothing, no active trading, did not even employ a fund manager, just took your money and put it into an index which represents 500 companies of US and divide your money accordingly, the return of that index is 23% in 2024. This is a dollar terms return we are asking about. So the reality of the investment is, it's not easy, but it is very simple. It's not that complicated. You can use an online platform to buy these things with a click of a button. You don't even need a fund manager. What you need is research. And research is not something which you have to sit and do it yourself. There are consultants, there are companies which do it for you. They even provide you a platform, they even help you and guide you that what are the things you can invest in. Now, if you see this performance, so there is something called NASDAQ, right, which is up by 28% in last 1 year. NASDAQ represents 100 tech companies of US. So it's an index. If you invest your money in this index, basically you're investing into these 100 tech companies. These tech companies which you already know, Apple, Microsoft, Tesla, Amazon, the darlings of Wall Street, right? The mega cap, the big seven companies, along with other 100 companies which are the part of this index. So tech, biotech, something which is non-financial. If you had just bought this index in the beginning of the year, held on to it by the end, you will see it rising 28%. Which means you do not have to come every day, look into the markets. You don't have to trade. You don't have to do anything. Just put your money in that index and this was the return. Is this something which goes on every year? No. A year before that, it could have gone up by 25%, but the year before that, maybe in 2022, it went down by 35%. So what I'm trying to tell you is investments are riskier, but there is a price for people who hold on to it for a longer period of time. Someone asked me who makes more money, traders or investors? So there's a small difference, right? When I'm saying trading, talking about short-term traders, wake up in the morning, plan their trades, put their trades, by the end of the day, most of them are out, profit or loss. Long-term investors are the one who are looking at the fundamentals of the company, right? Fundamentals of everything. So today, if Microsoft is planning a cloud computing platform, or Amazon has its own independent architecture of software as a service, then we will look into their balance sheets and think that if I were to invest in this business for the next 5 or 10 years, will it grow? And if it will, then that's the stock I want to invest in, right? So if you are a kind of person who loves the food, before you go to any restaurant and you see that there is a restaurant with maximum number of people in it, and then there is a restaurant with not many people in it, if your decision is on the basis of how many people are sitting in it, then it's a technical analysis, not fundamental. But if you go to the restaurant, check their ingredients, check how they make the food, the quality of their food, the quality of their ingredients, then you are doing fundamental analysis. So over the next 3 days, we are going to learn how fundamental analysis work, how technical analysis work, what are the strategies we can do. But as far as this is concerned, this is the most simplest form of investments which you can do. These are the kind of products which are available on any online platform. Even when you buy them and you do not take any leverage, you don't have to pay any holding cost. You can do this through funds. You can do this on your own. You don't even need a fund manager for that. This is for US. If you look for Europe, the first index, which is called DAX, which is German index, in 2024, it went up by 18.5%. This is in euro terms. If you look at Asian markets, look here, Hong Kong went up by 17.5%. Japan went up by 19%. Look at Taiwan, which has went up by 29.3%. And this was the time when a lot of investors were choosing between Chinese stock markets and other kind of stock markets, because we saw that in 2022 we saw a big drop in the Chinese equities. Now it happens a lot of times when markets come down, people get a bit scared and they try to sit on cash. What do you mean by sit on cash? Sit on cash means that you are not investing anywhere, you're just waiting for the right time. And that right time never comes. Because what is an ideal investor understanding? If this was the graph of markets going down and then moving up, we as investors, we dream of buying it here and selling it here. Right? Want to catch the bottom? Book your profits at the top. Are we able to do that? No. Do we hope to do that? Always. So what happens? Sometimes we end up buying here, markets come down, we wait for it, we buy more, comes down, we get panic, we start regretting our decision, comes down more, we start asking everyone, comes down more, and we are like, we made the biggest mistake of the life, let's just sell this. And then market moves up. Right? Now you're sitting sulking, telling everyone that this is bad, don't invest in this. The point is you have to plan it out. While this was going down, there must be some segment which was going up, which is the another part of this conversation, diversification. How much do we diversify is the question. They say do not put all your eggs in one basket, right? They say it for a reason. Why? Because if you put all the eggs in one basket, that basket falls, all the eggs break. That's why you keep it in different baskets. That's the idea. But do we really understand this? So today, let's say, for example, if you invest in real estate here or back home or any other country, are you also invested in stocks? If you are, then are you also invested in bonds? If you are, within stocks, how many countries' stock markets you're invested in? Is it only US, only India, or only Sri Lanka, or only UAE? We have to understand how many kinds of financial products actually exist. Now, for that, we have to go and understand the investment risk pyramid. Each one of us, we have a certain degree of risk appetite. When we look at that risk appetite, we try also to get maximum rewards. If you have some money, first, so we realized in 2020 when pandemic happened, we were forced to go behind doors, right? Nobody wanted to come out. We were sitting at home, making coffee, learning new skills because we were not really sure what was going to happen next. Pandemic also taught us to have something called an emergency fund, right? What is an emergency fund? Emergency fund is the amount of money which you need to keep with yourself at a place where if you had no job for another 1 year, your monthly expenses are being paid off. Now, before pandemic, I'm not really sure how many of us did that, but this needs to be a standard practice. So when I meet a lot of students and when we go to universities and colleges and we talk to students, we tell them that emergency fund is something which you must have. So whatever is your monthly expenses, multiplied by 12. That if you were forced to keep yourself behind doors and you had no job, this is 1 year worth of expenditure which you can face. So you start with this, right? You keep that money in your savings account, your bank account, whatever you can do. You move slightly further than whatever money you get. Then you start investing into something which gives you a fixed income. So there is an asset class called bond. Okay, bonds after 2020 became really famous. So bond basically means that when you take loan from a bank charges you interest, and bank tells you that I need my money back after this amount of period. When you're buying a bond, you are becoming a bank to someone. So it's very simple. When you're buying a bond and whatever value of bonds you're buying, you're basically lending that money to the person who has issued that bond. And till the time that person is using the money, they will pay you interest, which comes to you every year. So that person, by the way, can be a company or can be a government also. So there are something called government bonds. So all the governments forever are always in deficit. So they always need money to work. Like you talk about government of US, UK, Europe, India, Japan, China, every government issue bonds and they allow people to buy those bonds and lend money to governments. And while the time government is using that money, they will pay interest to the consumers. That's good, right? Because what is most likely to get, which is most likely to get bankrupt first? Apple as a company or US as a government? Apple, right? Because it's a company. So if Apple issues a bond and US government issues a bond, which bond would you like to buy first? US government. But obviously, the amount of interest which Apple gives you versus US government is higher because your risk is higher. So you segregate your money into corporate bonds and government bonds. Right? If you're a young person, more exposure towards corporate bonds because you have your life further to work and recover any money you lose in case you take higher risk. So higher risk does not mean loss. We have to change this mentality. Higher risk means that we are investing into those asset classes which are more volatile, which fluctuate a lot, but they could give us more return as well. So people who are younger, say who have another 35 or 40 years of work coming in or they have a source of income coming in, they can choose to invest more towards corporate bonds than government because corporate bonds slightly riskier, but they give you higher interest. So you're still forming the base. Now you moved a 4 point higher where you're getting a fixed income. Now whatever money comes next to you, you start investing into real estate. mutual funds, stocks, and then when you get more money, you more move towards cryptocurrencies, trading, futures. That is the tip of this pyramid. So if you don't have this sorted and you're directly going to buy bitcoins with your savings, you need to think about it, right? Because from bottom till top, the risk and rewards both increase. Which is likely to be more riskier? The money which is kept in the bank or the money with which you trade? The money with which you trade. Which could make more money for you? Trading or money keep being in the bank? Trading. So the point is, with higher risk, you could get higher reward, but it will be less panic if you were to allocate your money into different asset classes. Now, the asset classes which I'm talking about, this is just an understanding, okay? I'm sure at the end of the day, everybody has their choice, but if you're a person who's making 5 to 10,000 dirhams per month, a salary savings plan or US government bonds will be a great idea to invest into, right? So, please.
Today's boy, come first.
Yeah, please. No problem. Come in.
Can I sit here?
Yeah, anyway. So when we are looking at salary brackets, if you're a kind of person who's making 5 to 10,000 dirhams, could invest into government bonds, national bonds, US government bonds. They give you a fixed income. Plus, the security of the fund is higher, right? What is the biggest fear when you give somebody a loan? You're going to take your money and run away, right? Mm-hmm. But if you're giving loan to somebody whom you're very sure that has a good credit quality, then you do not mind even taking a lower interest because you know eventually your money is coming back. US government bonds are just like that. When you buy a US government bond, you could buy a bond which will mature in 5 years, 10 years, 15 years, 20 years. You can even sell that bond in the middle of your duration. And until that time, you will be getting a fixed interest, right? As of now, a US bond will give you around 4.7 to 5% in dollar terms if you were buying. So if you put your money in a bank, in a currency which has a risk of depreciating, instead of doing that, you could buy US government bonds and still earn 5% dollar terms, right? This is just a part of your investment. So that is why we have gathered here today, that understand more and more diversification. You're earning more money, 10 to 20,000 dirhams, you're looking into ETFs, looking into mutual funds, right? Exchange traded funds are just like mutual funds, but a lot easier to buy and sell because you don't need a fund manager in it. So ETFs are actually issued by bigger companies. So let's say there's a company called BlackRock. BlackRock puts $1 million and buy a few stocks together which belongs to technology. And once that portfolio is created, BlackRock will invite investors to buy pieces of that portfolio, which is called exchange traded fund. So your money is directly invested into all those companies what BlackRock has invested in. There are different kinds of ETFs. You talk about space exploration, innovation, robotics, financial services, even funds which have companies that have history of paying dividends for 50 years, 60 years. You can find those ETFs very easily. And then when you start earning more, you invest into real estate, equity markets, alternatives, cryptocurrencies. Move even further, you can start planning for your retirement also. This is based on our idea. Of course, all of you will have different risk appetites, but this is ideally how we should proceed. Sir, please.
Yes. What you started with this topic?
So we started mostly with this idea that there are different kinds of asset classes you can invest in. Okay. And you look at the foundation of investment where first you need to sort your base out, need to keep some money fixed, saved, an emergency fund. Okay. Move on slightly further, start earning something fixed income. Okay. Then whatever the spare money is, you start putting into real estate, stocks. And then at the end, whatever spare money you are left with is what you put into trading. Yeah, okay. Because a lot of us, I went to Middlesex University once to do a kind of guest lecture, and we were talking to students and I asked them, how many of you invest? a lot of them ended up saying that we do in cryptocurrencies. Like, do you have jobs? No. So whatever little bit savings they had from their previous work experiences, they put it into cryptos, which is not advised because you are directly jumping here. First, you need to sort this out, right? And then we moved on to the idea that how we can divide on the basis of our salary. Now, coming to the idea, how many kinds of asset classes are there today? So today we are going to understand a little bit in detail about these asset classes, and I'm going to make you create a watch list. And once you're home, I'll send you a practice account. Create that watch list, look at those prices, and then when we meet again tomorrow, I'm going to ask, what did you observe? So that way, you will take it seriously also, which is the point. Now, let's start with stocks. Stocks are companies. Every single thing today you are consuming, it is in a form. So there is a company behind it, which is manufacturing it. So today, if you take your deliveries from Amazon, if you have a Netflix account, if you even have an Instagram account, you're having coffee, you're eating McDonald's, or you're traveling through a Boeing airplane, or you're wearing Adidas or Nike or Skechers, from your MasterCards to Visa, every company allows you to invest in them. How? They have something called shares. Shares are these parts of company which are issued by these companies. They are available for you to buy. And when you're buying a share for a share price, basically that's a minimum amount which you need to invest in the company. So the moment you buy one share of Amazon, which is right now $196, you pay $196 and you take one share, one part of Amazon in your investment. If the company performs really well, more people would want to buy those shares. Shares are always limited in number. They're never infinite. So when demand of shares increases, supply is limited, the price goes up. So today, if you have purchased one share of Amazon at $190, if Amazon does really well for the next 2 or 3 months and people realize that through their financial results, everybody would want to buy Amazon shares. What will happen to the price eventually? The share goes up. So you bought it for $190, now it is $200. You can sell it at $200 and make $10 profit. The best part about stocks, this is one of the most liquid form of investment. You buy a share today, you want to sell it the very next second, you can. Why it is important to diversify? First, I said inflation is really big thing, right? So if you just keep your money in the bank, you will not be able to beat inflation. So what do? You invest into real estate. Real estate, amazing way to beat inflation, right? Which is another way of beating inflation? Stocks. Because stocks are companies manufacture products. So when the cost of manufacturing increases, that cost is passed on to the price directly to the consumers. So the earnings of the companies grow, eventually the share prices move up. So if you see any major index, S&P, German, Indian, any index, Hong Kong, Japan, you see their index is always upside because inflation gets adjusted eventually. Plus, if you buy a piece of land today, can you sell it tomorrow? You cannot. It's not that easy. Appreciation in value, not that easy. There's a big cycles when it comes to real estate. Sometimes up, sometimes down. So if you see between 2013 to 2018, the real estate cycle, UAE, was slightly on the downside. Post 2020, amazing surge. Anyone bought?
Yeah. I have a big, I bought it in 8.
Yeah.
I can see this graph.
So you're the one who bought it here?
No, that other, not top, another one. The other side. Yeah, top there, yeah.
Here?
2008, yeah.
Oh, you bought it here?
Yeah, I bought for 3.2 million.
And it went down?
It went to 1.8 million, become 3 million 13, 10. 13, again came down 18, this is 1.5 million.
Yeah. And then again.
Again went to now 3 million, 3.2 million.
Well done.
2008 to 2025 now.
So you know the real estate cycles throughout,
very
right?
Much, very much. That's Imar property, by the way.
Anybody who saw 2008?
Yeah, I bought in 2008 actually.
You bought in
I
2008?
came out from outside and bought it, okay. And also project of Imar, the first project of Imar when the career started, the career started. Greens.
Now you're saying this thing, I'm realizing I was 17 in 2008.
Yeah.
Had no idea how this works. But see, that's the point, right?
But I have any other property in India also. Got a lot of property in India. So
Yeah.
10 times higher, I'm from Bombay actually. So
But you diversified in Bombay and
I
here.
bought in Bombay, it become 10 times, okay?
Yeah.
Here I bought for 3.2 million, become 1.8, again become 3 million, again become 1.5 million, again become 3.2 million.
Bounced.
So I go.
So there are cycles, right? What he's
That's
directly said.
I see.
Okay. So exactly how it works. Even stock markets work like this. But the point is, while you're investing into real estate, simultaneously, so between 2012 to 2018, for these 6 years, when real estate was down, stock markets were going higher. So if you see all the tech companies like Amazon or Apple or Tesla, during this time, the stock markets went up 200, 300%. If you see companies like Amazon in last 5 years, it has gone up more than 200%. That is the power of diversification. So I would never tell you put all your money in stocks. I will never tell you put all your money in real estate. I will always tell you segregate it, depending upon your risk appetite. So stocks are one way because one, they allow you to take ownership in a company. Plus, there are two kinds of stocks. So one is called value companies, right? Value companies are the ones which are giving you a share out of their profits also, which is called dividend, right? So these are the companies like Coca-Cola, telecom companies like Verizon, McDonald's, financial companies like Bank of America, JP Morgan. They are less volatile, so they don't move too much like this, but they give you a fixed income also. So when you buy a stock like ExxonMobil or British Petroleum or Chevron, these companies, these are oil companies. So there are these utility sectors, like here it is DEWA, for example, right? Dubai Electricity and Water Supply, as good as a government bond, right? Gives you a dividend also. Companies like Salik, for example. There are these utility-based companies, and these are the companies which become value companies. So when you see that economy is inching closer to recession, you will see investors start taking money out of tech. They start putting money into these kind of companies which are utility based. So you may not buy a Range Rover or an iPhone during recession, but you're definitely going to drink Coke, right? That's the whole idea. So value companies, and then there is something called growth. Growth is tech. These are the kind of companies which you expect to grow in the future. So you talk about Apples and Amazons and Teslas. These are the kind of companies which you expect to grow in the future. So these are the companies which do not give you any dividends, but they move, they're really volatile. So you will not be surprised that if you buy Nvidia today at 90, it has gone up to 140 in 15 or 20 days. They're really volatile, right? Why they do not give out any dividends? Because whatever earnings they make, they reinvest it into research and development. So you divide your portfolio. If you are slightly aggressive on the risk, more tech, less utility. If you are more conservative when it comes to risk, less tech, more utility. And you can always divide these things. Even tech, there is one tech which is more established, right? There is one tech area which is emerging. I'm talking about cybersecurity. I'm talking about remote medical technology. I'm talking about 3D printing, drone manufacturing. These kind of companies, agricultural technology, there are companies which are improving, using technology to improve the fertility of agricultural land. Those kind of companies which are about to come. All of you have heard about Elon Musk's mission to Mars, SpaceX, right? Space exploration. What is going to happen to that sector? You can do these investments through stocks and ETFs both, but you must invest into different sectors. Do not think this is not going to do anything. Blockchain or digital payments, fintech, as we talk about, it has always been on and off, right? What is Bitcoin? Are we using Bitcoin for any kind of payments? No. Why Bitcoin price is 80,000, 90,000? Why? A lot of speculation, a lot of movement towards what Donald Trump has done. So these days when I go to sleep, I see prices different. When I get up in the morning, I see prices different, followed by a news that Donald Trump said this. It is enough for me to understand that I need to go back to my portfolio. There is enough volatility. So the moment Trump became the president, he removed all those officials which were very strict on regulating cryptocurrencies, brought more people who are more lenient towards this part. So companies like Robinhood, which were under strict regulation for cryptocurrencies, their stocks went up 40-50% since November till now. Companies like Square, companies like Blocking, all digital payment companies. So you need to embrace this change. Even if you're not aware about, a lot of times I hear this, that I don't invest in something which I don't know about. I hear this so many times. But the point is, world has changed and we have to change this mentality. If you're not aware about something, hire a consultant to know more about this and invest. Because post 2020, what did we understand? Anything can happen, right? We always thought that so this is our humans as a mentality, that whatever worst is supposed to happen, it will not happen with us. It can happen with anyone. So we are never fully ready. And pandemic was the best example of that. So much technology. Back in 90s, we used to think about that 2020 will have flying cars, right? A robot army and whatnot. The point is 2020, one virus forced us to go behind our doors and lock everything. No technological advancement, which means eventually there are a lot of these areas which we feel they have not been explored, but over a period of time, remote medical consultation is going to be real. DNA sequencing is going to be real. Gene therapy is going to be real. There are so many companies. So there are companies which are into these areas, but they are lower, smaller market value. If something positive happens, their revenue stream can be really high. But then that is where your risk comes into the picture. So what do? If you were investing 20% out of 100% in stocks, out of that 20%, maybe 10% goes to value, where you get dividend. 5% go to tech, good tech, Amazon and Apple's. 5% goes to these new futuristic areas, the change, the mega trends which are happening. So this way you are not away from any kind of area or something which can further rise in value, right? And when I talk about stocks, please look into every market. Look into China, look into Japan, look into India, look into US, look into Europe, UK, everywhere. Why? Hong Kong index 2022, 2021, 2020. For 3 years, we saw big downfall. In 2023, we saw Hong Kong as low as 50% from its peak. Why? A lot of things. China quarantined more than usual. When most of the countries were out of COVID, China was still under quarantine, so they opened late, which pushed them to deflation. That made the central bank inject more and more cash in the economy, but they were also going through real estate crisis. So they eased down on the rules and regulations to buy real estate. And now if you see, Hong Kong is back. The recovery has happened. The index, if you see, it's already trading at 25,000 Hong Kong dollars. Beginning of 2024, it was at 15,000 Hong Kong dollars. So if you were away from China, you missed out on a big growth which could have happened. That is why every geography, it matters a lot, right? And you can do this when you're buying stocks through funds, through indices. You can definitely invest into these. Second is commodity. Which is one commodity we care about a lot these days? Gold, right? Oil also, gold also. Gold, as we speak, has reached to new highs. $3,000 per ounce, as we rightly speak, $3,030 per ounce.
Today again, you saw oil are going to be very high now.
They're talking about, so gold is a safe haven, right? People get under panic, they start buying gold. You as an investor can buy gold as a commodity in online trading accounts. But if you feel it's too volatile because it moves easily, $30, $40 a day these days, average movement in gold. Do not get surprised. Back in 2012, if gold moved $40, we used to talk about it. What happened? How it happened? Who said what? Now, you went out for a coffee break, you come back, $20 gold already moved. News came out, moved. So volatility has increased, right? Which is good. Why? Because now you don't really have to buy a very high quantity to actually impact a bigger profit. If gold has moved $40 in a day, even if you have 5 ounces of gold, you're talking about 200 up and down, right? Which has reduced your risk with high volatility. But when we talk about commodities, you can buy gold as a direct commodity in your online platforms. You can also buy or take exposure in gold through exchange traded funds, which means, let's say there is a company called SPDR. I own that company, right? SPDR manage assets for the clients. They have some $1 billion in their assets. They use that 1 billion to buy gold future contracts. And once that portfolio is created, I will sell the pieces of that portfolio to any investor who wants to pitch in. So in last 1 year, gold has gone up by 40%. SPDR gold ETF has gone up by 38%. So that is one of the best ways, because the gold ETF value is some $75 or $76 per unit. Gold's price is $3,000 per ounce. So if you want to take exposure in gold but not directly buy the commodity itself, you can do this through funds. Another very important commodity which a lot of people are talking about, silver, which has been very undervalued so far because gold has appreciated a lot. Silver, not that much. And if we compare physical demand and physical supply of silver, right now there's a lot of deficiency in silver supplies. A lot of analysts have predicted that this year is going to be the year for silver where we could see a rise. Only one question pops in: tariff threats. Donald Trump wakes up early in the morning and says, I'm going to put tariff on this country, that much, this percentage. By evening, he might postpone it, or he will just continue with a higher percentage. If tariff threats increase, it affects the global supply, affects the manufacturing and exports, that pushes silver prices down, right? So that is what we saw in 2016. This time, it should not be any different. But again, as I said, in 2016, the physical supply of silver and demand was not as it is right now. So it's slightly different. So we must take that also in consideration. So if you're a long-term investor, you could actually buy silver ETFs, gold ETFs. That is the easiest way to take exposure. You can sleep peacefully at the night without thinking that your trade is open, right? If you are a trader, you're doing day trades in silver, please do put stop losses. You go without stop loss in this market in a trade, you're responsible for your own actions. Because today, the movement is very, very volatile. The day changes, trend changes. Even if you hold your trade for 2 days and you see it is not coming back to that level, close it out, take a few hours off, come back, see the trend, and then enter again. That is the most disciplined way of doing this. You entered into a trade, holding on to for 3 days, 4 days, went against you. Now you keep adding to a losing position, you will not survive. So please, stop loss is a must and diversification is the must. So we are looking at commodities, crude oil. As and when geopolitical tensions rise, we see crude oil prices also going up because supply gets disrupted. There are 2 kinds of crude oil, okay? So in your watch list, what you need to do is add gold, add silver, add crude oil. There are 2 kinds of crude oil. One is Brent, and you have to observe both of them. And one is WTI. Brent comes from the North Sea, so Saudi, Russia, Middle East concerned with Brent. WTI comes from Canadian oil rigs, basically US based oil. Oil is traded dollar per barrel. 1 barrel is roughly around 159 or 160 liters, dollar per barrel. I want you to add both the crude oils in your watch list. Observe their movement. In 1 day, oil moves $1.5 very easily. Why this is important for you to know? As a trader, it is important to know the range of a product, right? So today I'm telling you, gold, for example, very easily moves $25 to $30 a day. Silver $1.5 very easily a day. Why it is important? So that you manage your quantities well. If you're not aware that gold moves $30 in a day, you might end up buying 100 ounces of gold, right? Could make your portfolio, could break your portfolio. So we need to be aware. In commodity, there are a lot of agricultural based commodities also. See, there are people who trade in sugar, coffee. There are two kinds of coffee. One is coffee Arabica, one is coffee Robusta. And you track both of them. So mostly the coffee which you drink is coffee Arabica. 60% of the world's production is coffee Arabica. So you could look at coffee prices. Wheat prices moves a lot day on day, very volatile. For day traders, a lot of people trade in wheat. So you can check wheat also. Moving on to forex. Forex is one word which you always hear. Forex trading seminars, forex trading company. So many times forex trading scam also. Forex or foreign currency, these are currency pairs which are traded every day. There are more than 300 pairs, but the ones which you should really look at and add it to your watch list: euro dollar, dollar yen, and pound versus dollar. Three very important currencies. Why I'm making this added? Because they are trading always in a range for a significant period of time. If you monitor enough, you will be able to trade in and out easily. But that being said, you must track them more. Trading is buying groceries. If you know to buy vegetables, you know how to trade. Why? Because you buy vegetables every other day, every week. So you kind of track the prices. So when Carrefour puts up a big discount of 40% and you see the price, you will know whether that 40% is real or they just spiked the price and then reduced it by 40%. That is the power of tracking everything every day. So in one day, you have your app, you have your watch list, just scroll through it. Do not even fall into that pressure that today I have to put up a trade. First 10 days, all of you just look, glance through it so much that if you are monitoring a price and there is a range which is now registered in your mind, for so long you are watching it that the moment this range breaks here or here, you will get to know that now is the time to buy, now is the time to sell. This is the easiest way of doing this. No matter how many books you have read, how certified you are, if you do not track the markets every day, you will not be able to trade in it. That goes for every segment, right? Share baskets, or as we know as ETFs or share baskets, these are a bunch of companies put together in a basket. So if I say remote lifestyle basket, which means you can buy a basket which has companies like Amazon, Microsoft, Zoom, Netflix, those companies which are good for remote lifestyle, right? If you are not able to get out of the house, these are the companies which you'll be using. If I say a semiconductor basket, the semiconductor basket will be made of all the companies which are either manufacturing semiconductors or are some way able to provide technology. So these kind of baskets are prepared. It is always a good idea to invest into a theme-based basket. AI was not something which has been talked about these years. From 2010, 2011, AI was something which was always talked about. But nobody would take it seriously because it never really became a reality until people started thinking about or started looking at ChatGPT, right? ChatGPT has become very important now. Anyway, how many of you use ChatGPT? Almost every day. I'm assuming you're a student. Which university? College? Curtin. Which year?
I just started.
You started. Okay. Which class it is? Finance or finance itself? Finance and marketing. You will know the importance of ChatGPT. I'm sure in the coming few years, while you are making your projects and assignments. I don't want to say it's a lot easier for you because maybe the source has become easier to find, but now you have a lot more competition. We never used to have that much amount of competition. But imagine that ChatGPT is not just one. There are many versions of it. Now there is a ChatGPT deep research also, which if you pay, you will get a lot. So once that happened, and how that happened? Because of the pandemic. If I would send a Zoom link to my dad and wanted him to talk on Zoom before pandemic, he would not even accept. You're like, I don't know all these things. Call me directly over the call. It took me time to get him to WhatsApp calls and bought him, right? After 2020, he's sending me message, free, come on Zoom. Why? They got adapted to technology. So did we, all of us. So now we are doing a session like this. The system is right there. There are people who are already on the Zoom watching this session who cannot come. So the point is we have got so adapted to technology that now we are ready to be a part of it. The moment we are ready to be a part of something, we are ready to invest in it and embrace it. How much digitalized do you think we are today? From your MX ID to your bank accounts, to your gaming, to all your records. You are fully reliant on your phone. If I see someone here today without the phone, I would be so impressed. But the point is, it's not going to happen. Phones have become an integral part of everything. Basic need. Food, water, air, phone. And shelter comes after the phone, sadly. Why? Because everything you need to do, it's digital. Now tell me what you are doing to protect that. Your phone password is not enough, right? Your fingerprint, your biometrics, your face ID is just cute that if you think that is going to protect your privacy, it's not. Cybersecurity is one industry where government is investing billions and billions of dollars. One oil pipeline was hacked through using bitcoins as ransom, and oil prices went up by 5% because there was a supply which got disrupted. How much do you think government would spend on preventing something like this? Billions of dollars every year. There is malware, identity theft, ransomware, corporate espionage, so many kind of cyber threats. How do you fight that? There are companies like Zscaler, Palo Alto, Okta, which have the expertise to provide cybercrime solutions. Are you investing in that? No. But are you a part of a bigger digital footprint in this world? Yes. So you need to understand these are the areas which will develop further. If digitalization will grow and your reliance on digitalization will grow, don't you think the threats also grow? Especially now, even your crypto wallets, after so much security, there was a big crypto hack, $1.5 billion worth of Bitcoin taken. The point is, because now any hacks can be done by paying in cryptocurrencies, which is untraceable, it becomes even more threat. That is why you need to protect yourself. That is why companies like this will be helpful. So what I'm trying to tell you is that eventually cyber security will become a bigger thing, and you will realize that all these companies which you have not invested, they have started rising. So you put a part into these kind of baskets, cyber security basket or something like that. Bonds, as we spoke about, the safest bond as we speak today are US government bonds, is what the fund managers, they predict. There is always a risk, of course. US government getting bankrupt is not something which we think about, but can I say that it is impossible? It's not. So in financial markets, we never say guaranteed returns or guaranteed profit. There is no such thing as guarantee. Even if you buy a US government bond or any government bond, there is always a risk that eventually or someday a government might bankrupt and you will not be paid your coupons. But at this point of time, a lot of fund managers consider US government bonds as risk-free return. We are getting 4 or 5% return by giving a loan to US government. 2 years, 5 years, 10 years, eventually you can get your money back and you can earn an interest, right? What are the factors which makes you decide where to invest and what to invest in? Age, time horizon, your financial goals. So somebody who's a student, you can take more risk. You can be inclined to take more risk. When I say more risk, which means instead of more investments in bonds, could invest more in stocks. Because seeking higher risk, you're looking for higher return. Doing that, even if you lose some money, you know that you have another year of income coming in and you will be able to recover it. But somebody who's already retired and you do not have any other source of income, more inclination towards bonds, which can give you a fixed income. Number of dependents, risk profile, income stability, some of the factors which really pushes you to diversify more or less into fixed income or away from fixed income, more towards trading, away from trading. This is something which is really important. So very common term, something called a systematic investment plan. SIPs are very easy to do. Even with a $50 amount, you can dedicate, we can buy a S&P 500 US based index using an online platform. And you can dedicate any amount, but do it month on month, which helps you in developing a discipline of investment and the power of compounding. Because when you keep buying, so what happens eventually? The SIP is very simple. You buy, you dedicate a special amount on a specific date, specific amount, specific date. So even when markets are going down and you keep buying, you keep buying, you keep buying, eventually when market goes up and you keep buying here and here, you will see that when market goes up, your average price of purchase is here, not here. End up making more. Plus, if you want to save money for your children's education, you want to have a certain amount of fund coming in after 18, 20 years, SIPs are one of the best ways to do it, right? This is, I am telling you, apart from your trading and other investments, which is something you can do. Now, I'm going to show you very quickly how to create a watch list. After that, if you have any questions, you can definitely ask. And this watch list, which I'm going to create now, I'll give you demo accounts. So when you're at home, you can practice this out. And we will learn how much they move and how they move while we are discussing about this. So this is an online platform. So, second. Ani, can you just put the screen here? The desktop I want to share, desktop. On my system.
This is your system.
Here. Just check. On the platform. I call Ani. So what we are going to do is, this is the list of products which I would want you to add on it, right? So one is metals, which will be gold, silver. Then in energy, we are going to add Brent oil and WTI. So we have two metals, we have two oils. In agriculture, we're going to add wheat and coffee Arabica. Just this for commodities, 2, 4, 6. Right? To keep it easy, don't want to make it too complicated. So first you start looking at these 6 products in commodities, then we'll move forward. Post that, we start with stock index. Now in index in US, I want you to look at SPX 500. So this is a broader benchmark which sees the performance of 500 companies of US market. These 500 companies include tech, financial services, healthcare, hospitality, a lot of them, right? So how do you do it? This is your platform. just go here to watch list, click on create new watch list, and let's say give it a name, training day 1, and let's add products. So first you write gold versus US dollar. This is right here. So while you add this, then write silver versus US dollar. So these two are the actual commodities. Then you move on and add crude oil. So one is crude oil Brent, and add crude oil Brent cash. This is the end, the spot. And then you add WTI, which is crude oil US. Again, crude oil West Texas cash. Also wheat, right here, wheat cash, and then coffee Arabica cash. This is for commodities. When you click on create watch list and this is done, you can go to the watch list anytime, click on the one which you have saved, and you will be able to see the products which you have added. So if you see here, gold, and what does it show? So if you see at the extreme right corner, buy and sell prices. This is the live price which is going on 3034. If you see today's low, 2998 for gold, high is 3037. Yesterday or Monday, it closed at 3001. As compared to Monday's closing, and we see the current market, it is up by $34. Percentage increase 1.1%. So it shows you the today's low and high. 2998, 3037, already moved $37-38. This is when US stock market has not opened yet. So this is a great thing about UAE as a time zone. Once you are done from your work, 5 or 6, that is when US market opens, there is enough volatility for you to come and participate. So these are your commodities. Then you come to index within the same watch list. What do? For US market, you write S&P 500. So this is one index. Add NASDAQ, NDX, which is NASDAQ 100, the tech index. And also from Germany, add Germany 40. And one more, which is, or this is enough. So for now, look at 3 markets, add one more, which is Hong Kong 50, very important at this point of time. It moves a lot. Look at this. And I want to show you why what I was talking about Hong Kong index. Just look at the price movement here. So I'm going to take you to how it was back in 2021. So you can see the prices. See this. This is 2021. Look at this big fall, 2021. This is 2022. The fall continues. And then look at 2023, moved slightly higher, fall continues. 2024. Now look at this 2024. Right here, crossing these resistance, moving back where it used to be. This line, right? Imagine anyone who has entered in Hong Kong market here or in 2024. That is the power of diversification. So while if you were completely unaware of what is going on in China, why you need a consultant to tell you these things? Investment consultants are like doctors. We feel that we don't want them, but we definitely need one. The reason is that there is only limited knowledge you could have while you are busy with your own work, right? What you do is what you are more aware about. So you don't want to put your energy in every single thing. For that, it is only the smart ways to get a consultant who can tell you that which are the markets which could go higher or lower. There will always be a possibility of the consultant being wrong, but that will never be the idea. If today you ask me something about some market, on the factors which I have to cover, I will cover everything and give you my honest opinion that this is what I feel. There is always an uncertainty which can not be counted into. So we have to be ready for that. So that is why I want you to just add this in your watch list. Index, enough. Then you move on to currencies, add euro, dollar. add pound, which is sterling, pound and dollar, and then also add Japanese yen and dollar. Now, once these products are added, in this, you can add as many shares as you want to. So, I will add in this Tesla, I will add in this Amazon, Nvidia, I will also add Coca-Cola in this. Now, if you see Amazon, for example, how Amazon has gone through in last few years. So, if you look at just 2024 alone and 2025, see this. So far, this is where it is. Look at this price, which was 198 or something. It is 195. Look at this big December 2024 bounced all the way here, which was 240, and this was in February, by the way, 240, has come down all the way to 195. From 240, this top, it's come down to 195. It's Amazon, a $1 trillion company. Market always presents discount. But at this point of time, if you're too scared to enter, that is what we have to work on. Because we have to understand that there will be, you always want that I should enter here and exit here, right? You want to, again, enter here, exit here. We will never get this. We need to have our entry point. So, something called a ladder portfolio, where if you were to invest $10,000 in Amazon, don't put 10,000 right away, put 3,000. If it comes down by another 10%, put another 3,000, comes down by another 10%, put the remaining amount. A 10% decline twice will encourage buyers and institutional investors, and possibly Donald Trump also, to enter and buy the stock. We see the same thing in a lot of companies, a very similar pattern. Look where Tesla is right now. So, look at this stock. This is where exactly Tesla is, where it used to be $483. This was on 17th of December, right? If you see around 24th December, look at 16th January, 441. Right now, it is here, 229. From $480, it is down to 229. Even if I zoom out to see the historical prices from 2023 or somewhere around here, look at this. You see a support forming here of the prices. This is where most of the buyers would enter, 169. Should we wait for the stock to go down from 230 to 169? It may or may not come. But where it is right now, here, look at this support level right here, 214, 237, where it was 450. Even if the recovery is slightly higher, 271 to this resistance here, from here to here. Or if it breaks and could go higher, 300 or 400. A bit of your income. That is why we say that you need to be invested. So there was a study done where it was seen. So there was a study done where it was seen that from 1994 to 2024, if you had invested in S&P 500 throughout, so 30 years, whatever the return was generated, say amount of X, there were 30 days during these 30 years where the market moved a lot, best trading days, where market moved up and down, both. 30 of those trading days. If you were not invested for those 30 days in these 30 years and you put your money, you took your money out, this return which was generated, it would go down by 83%. Just because you were not in that trade for 30 days. So the power of being invested, we should never underestimate. That's why whenever you hear somebody saying that right now is not a good time, either you know when's the good time, which is not possible. You cannot know when's the good time. Any segment, Today, when you step out of the house, there are a bunch of uncertainties, right? So every single time when we get up in the morning, why we call it a good morning? Because we got up alive, right? And that is the reason why it is a good morning, right? When we go to sleep, why we call it a good night? So that hopefully we get up next morning. Uncertainty is the part of our lives. We can never time it. We can never say this is not a good time or this is a bad time. You need to be invested every time, because if your money is kept with you, it's not liquid, it starts stinking, it loses its value. That's why it's called liquidity. So the idea is you don't have to be a trader to be an investor. You can choose to do short-term trades, long-term investments. I say have a mix of everything. Trade only when you have a long-term portfolio sorted, because trading is slightly more riskier than long-term investment, right? Trading requires leverage. You can take advantage of the falling markets, which we will also understand in the coming few days. For now, let's just add this in a form of watch list. Please write your emails or talk to your relationship managers. We'll send you a demo account on your email. Today, your homework is to create a watch list of what we have talked about. Tomorrow, half of the session we'll do on technicals, understanding how to buy, sell using these candlesticks. Half of the session will just cover what is leverage-based trading, what is short selling, so all of you know how to buy, sell using this platform. Last day, we can do strategies, different strategies, pair trading, price action analysis, long-term portfolios, and then we can send you those PDFs so that you can practice at home. Right? Any questions, guys, from what we have covered? I think we are done with the session, but if you have any questions, we can always answer that. So thank you very much.